Let's welcome in Jonathan Barrett. We were trying to connect with him earlier. Jonathan, could you start with the Brent crude? What's happening over there? I believe we've got you on a much better line now.
Yes, good afternoon. I think it's a lot clearer. Look, when you look at Brent, obviously we're trading around that 70, above 70. A lot of us didn't actually think that Brent could get this high this quickly, but it certainly has. And it looks like it seems to be holding these levels. I think at the end of the day, what people are concerned about is there's still a lot of conflict out there. Whether you're talking about, John Bolton being the new Donald Trump person, whether you're talking demand, whether you're talking nuclear deal being off in Iran, Russian problems, it all points to concerns about supply. And as a result of that, people are taking it out on the oil market, and oil markets are obviously trading higher.
In terms of oil, where do you think is the top? Where do you think oil can top out at this point of time, or it's difficult to say?
Well, I don't think it's. I mean, at the moment, whilst we've got a lot of unknowns out there, it's very hard. A trend's your friend, and it's been that case ever since Brent broke out through that $66 a barrel. So I think the trend is your friend at the moment. And whilst we got these conflicts out there in the market, it's very hard to short it. One thing we do know is the US now is the top producer. It's ousted Russia as the world's largest, and they're continuing their mandate to produce more oil shale. So I guess while that continues and whilst production keeps up, if we don't see that demand, then prices will go lower. But whilst we see these conflicts out there, then people will get nervous and always go to it. I think we've got to need some resolution in these conflicts before prices will come lower.
This is Nantara. Good to have you in a good connection this time round. So if I were to talk about the trade war, we did see a knee-jerk reaction in the commodity markets. Money was pulled out of the equities, out of bond markets, currency markets, and clearly commodities were being seen as a safe haven. Do you expect that trend to continue? Because if you look at the trade tariffs, while it might not have mentioned oil and natural gas specifically, now you have China launching oil futures as an alternative to America, as well as hopefully what it's hoping for the US dollar one day.
Yeah, well, I think two things there to cover off on. First, some commodities had a good lift. Obviously, gold had a very good lift. And I think that has more to do with a weaker dollar rather than sentiment towards commodities. Remember, US dollars are down at, a 3-week low at the moment. So I think, obviously, we're seeing a reaction to the weaker dollar, and that's caused commodity prices go higher. I think it's very interesting now that we turn to the new one-denominated contract. And I think that, to me, although it's been in the pipeline for 25 years, it's finally out. But it certainly makes sense because I think when China is the largest consumer, having a contract that mirrors their economy, they are the largest economy. So to me, it just makes prudent sense to actually have a contract. Yes, it's in conflict with Brent and WTI, but it makes sense because it's more Asian-based.
You think will not have an impact as such, or is not a fallout of the trade war? That's one part of my question. And second is, you did mention that US is now the biggest producer. So does that really make a difference now if OPEC and Russia decide to continue with the production cuts? Is that going to have a significant impact going forward in whatever it is that you guys are penciling in for crude prices?
It's the concern we have over trade tariffs. Now, that has an adverse effect, I guess, on where people are starting to plan to where commodities are going. I think when you look at these trade wars, it's protectionist. When it's protectionist, then there are concerns about economic strength. Economic strength might cause oil prices to come lower. But I think at the end of the day, when you look at these tariffs, a lot of it seems to be getting watered down, and I'd expect more and more to be watered down. Now, concerning, I guess, that they've come up and China's now got their own contract, I just think it's just interesting timing, that's all. I think China is the dominant economy. They're out there to push what they can do. They're continuing to liberate their economy, so I just think it's all a natural progression. When it comes to Russia, when it comes to OPEC, when it comes to supply cuts, that to me is very interesting because, whilst the US produces more, OPEC will continue to keep the supply strength in there to keep prices higher because they're seeing more supply. Let's see where prices go, but if they go too much higher, I think you'll find that Saudi Arabia and Russia will just ease it just a little bit so prices become more normal, so that the economies don't store over higher prices for crude oil.
Okay, Jonathan, we're going to leave it at that. Thanks so much for joining us here with your views as far as the crude markets go. A lot of action we're seeing there, whether it's OPEC and Russia extending production cuts, China trying to exert itself with its own oil futures. With that, we're going to take a short commercial break. Then if